Good morning, everybody. Hey, welcome to Thursday, August 6th. Today is Jobs Day. We'll find out the unemployment, first-time claims, that kind of stuff today. But before we get into that and we talk with Dave, let me remind you, this Friday, that's tomorrow, Fridays with Phillip, our first one, our relaunch. And we are excited and want you to join us. Hey, look, all you have to do is here on Facebook, you can find our page. There's a link there that'll take you right to the registration page. If not, hey, today you can call the office and register that way. But do it now. Give us a call. Go to our website, statlerfinancial.com, and you can register there also. So just get registered. Come join us. Bring your questions. It's always good when we have folks online and we get a lot of good questions. So we're excited for the relaunch and look forward to seeing you there. And now we'll get ready for Dave to pop on.
5, 4, 7, and Carlos Santana there with Rob Thomas from Matchbox 20. It's called Smooth, man. We're at 8:40 now. It's 20 before 9. Let's check in on your money and see how that's doing. It was kind of a barn burner day yesterday on Wall Street. Everything was up. See if we can keep that going off the data the government dumps on us this morning. Downtown Sebring we go to the offices of Statler Financial Services. Phillip Statler is standing by. Phillip, good morning.
Hey, good morning, Dave. I hope you're doing well. Yesterday was a great up day. And, you know, today, really the only economic news we have is jobs. And you know, that could buoy either way in terms of the market. It was down a little bit as I got up this morning and started perusing some of the channels there.
Evidently, even a bad number is good news when it's not as bad as they expected. 1.2 million first-time jobless claims last week, according to the federal government, and that was only down by about 249,000. But you're saying the market kind of had a case of stinking thinking, and they were expecting a lot worse than that, I gather.
They were expecting a little over 1.4 million first-time claims. So that was a lot better than expected. Obviously, it's still not where we want it to be when it comes to jobs, but still better than expected. And so we continue to see some upward movement in the futures, because like I said, when I got up this morning, futures were all pretty much in the red.
Yeah, and my delayed quote is still showing them in the red. And you're saying with your instant quote service, you're getting much better numbers than I am, and I'm glad to hear that. Continuing claims, just to flesh out the rest of the data dump this morning, continuing claims, we still have 16.1 million people filing for unemployment. It fell by 844,000 last week, which we'd consider, again, good movement. Except then we got a picture of the Challenger report, which is a private report that comes out and projects how many layoffs are expected. And the July report from the Challenger report kind of confirms something you've been warning people about on the payroll protection loan expiration guarantees. A 54% increase in projected layoffs during the month of July. That also kind of explains the ADP report's big disappointment. Netted down, number of jobs gained just kind of got wiped out by the layoffs, didn't it?
But yeah, I believe so. And I don't know that we're done with that, Dave. You know, as we continue with this COVID-19, it's really a fluid situation, because there are some states that are still locking down, and there are other states that are letting people do more stuff. And as those numbers continue to rise, as the COVID numbers continue to rise, you see states taking more action. So, you know, until that thing is resolved, the unemployment figures are still going to be not good.
Yeah, it's going to be herky-jerky no matter what. We hit a hot spot. Governor decides to shut down the bars, or take in more restrictions on movement. I mean, with some of the cities in California are almost in full stay-at-home again already because of the hot spots they developed out there. When we're going to get our bars to reopen and see any looseness here, I'm not sure. I'm cheering for that, but at the very least, it's a fluid situation as far as when we can start loosening up again and actually see those numbers going down.
Yeah, it is. And when we do get to that point, that will be a very good sign.
Absolutely. We're not getting any help in terms of morale help from the Federal Reserve. Two Fed governors, let's see, Kaplan and Mester, both were doing the rubber chicken circuit this morning, and one of them said the labor market is turning around and weakening, and the other one says it's even weaker than the data indicates, which probably is one of those, what was your first clue looking at those numbers, right?
Yeah, it is. And I think the Challenger report probably is a great indication of that, and what we may have looking forward, other things we may have coming too.
Now, we are starting to kind of confirm the thing that a V-shaped recovery, no. A steep U, well, we might be into it, but it looks like it might be a kind of gradual cursive U the way we're going at it at the moment, doesn't it?
Well, and the other thing is, could it be a W? Yeah.
Oh, cut it out. Outside of every gold, outside of every silver lining, there's a big gray cloud, right?
That's right. Somewhere out there.
Actually, in truth, one needs to put out the signpost saying we don't know and it could. We just hope to heck it doesn't. Earnings season continues. Have you got some good news for me this morning, Phillip?
You know, we've got kind of both today, but I'm going to start with some of the bad news first. And so, you know, the travel entertainment industry has just gotten really the bad end of this whole deal. And so Hilton reported today, and they lost almost double what was expected. They lost 61 cents a share. They were only supposed to lose 31. You know, revenue was below estimates. So, you know, they're just obviously like all hotels. They're hurting from all the pandemic stuff going on right now. They're down 1.1%, almost 1.2% this morning before the market opens up.
Ouch. I got to believe that staying in communal settings like a hotel is probably something that scares folks even more than traveling in general.
Yeah, it's, yeah, you get a little bit precautious, right, when you start doing that type of stuff. So hey, we had Restaurant Brand reported. That is the parent company of Tim Hortons, Burger King, Popeyes. They came in 4 cents ahead of estimates. Revenue beat what Wall Street had forecasted also. They say they're about 90% of the prior year's system sales by the end of the quarter is what they're projecting.
That would be a pretty good number to hit, to be only 10% off with all the herky-jerkies we're going through, isn't it?
It really would. And remember, Restaurant Brands is traded on the Toronto Stock Exchange, and so there's no trading yet on that stock. So not sure how it will open up this morning, but I would think it would open up to the good side.
Oh yeah. As an aside, I didn't realize Popeyes and Burger King were co-owned.
Yeah, I didn't either. I mean, I knew Tim Hortons and Burger King, but I didn't. I forgot about the other one. So
yeah, I never really knew where Popeyes came from. I knew there was a lot of excitement when they opened up here in town. I didn't realize they were a relative of Burger King. Interesting.
Yeah.
Other pictures.
So then we had Contour Brands, which is the maker of Lee and Wrangler jeans.
I saw about that. Yeah.
So they reported they lost 22 cents a share, which was better than the 40 cents they were expected to lose. And revenue was ahead of what was estimated. So they said they're in good financial position, despite, you know, all the negative stuff going on right now. And they are trading up almost 3.5% this morning.
Not bad. Time for a couple more other highlights.
All right. So let's look at Viacom and Roku. So Viacom, which now is Viacom CBS, they reported $1.25 a share, beating the 95 cents that was expected. Revenue was also above forecast. Everybody's watching TV, so you know, ads are coming in, and their streaming business is growing also, and so they're trading up about 3.6% also.
Cool.
And then we got Roku. Roku beat expectations. They still lost money. They lost 35 cents a share, but that was better than the 50 cents they were expected. Revenue beat forecast. They are a little under pressure though, because let's face it, they got a lot of competition out there now in the streaming video service, which is going to ultimately give them some pressure. So they're trading down today, 4.4%.
That's a market with more competitors in it than you could count on the fingers of both hands right now. One of the early birds in the business probably now is starting to feel the effect of competition they didn't even expect.
Well, I think that's true. There because so many people are out there. If you got time, I got Etsy. Etsy
Okay.
came out. They beat well above what was expected. Revenue was also a beat. They saw nearly 19 million new and reactivated buyers. So good thing for Etsy. Something's out there though. Well, I know they're butting up against a 52-week high. They're trading down today 1.5%.
Profit taking, but
Yep.
both our wives are very happy to hear Etsy is doing fine, right?
Oh yeah. Yep. I know a lot of people use Etsy.
Absolutely. Setting the table, yesterday was a big up day. 1.39% up on the Dow, up 373 points. NASDAQ, another closing record, up 57. And the Standard & Poor's was up 21 for another 0.64% increase. I'm seeing a little turn on my delayed quote, Phillip. 45 minutes early. Are we still in the green?
We are. We got the Dow up $43. The S&P 500 actually just kind of went green. It's up $1. And we've got the NASDAQ up $15. So everything is green right now, much better than what it looked like this morning when I first started looking at it. If you look at silver and gold, we got silver is still, man, it is just going skyrocketing right now. It's up 4.75% to $28.17 an ounce right now. And gold's not bad. It's up almost 1% to $2,056 an ounce. Crude oil is down from where it was yesterday when you and I talked, but up from the close, up about 0.25% to $42.31 a barrel.
Getting into healthy range for that anyway. Off night on the Asian markets, the Asian Rim market generally in a little bit of red ink in the morning at the early close. Europe is also off by a bit. Great Britain is off by a pretty substantial amount. I think that was because you heard them talking about negative interest rates on their central bank, right?
Yep, probably so.
Could be a piece of it. Somebody needs stability or advice on to how to grow and where to put your money in this weird market that we're going through, Phillip. How do I get a hold of you for that advice?
David, give us a call at 863-382-0037. And even better than that, we have Fridays with Phillip starting tomorrow. All they have to do is go to our website and register under the events tab and join us tomorrow at 11:30 for that. Follow us on Facebook. Find us under Statler Financial Services. And then check out our radio show. It runs every weekend, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk 730.
Great material every single Saturday and Sunday on the Phillip Statler radio program on News Talk 730. Sir, we will see you tomorrow about the same time here on Light. Fair enough?
Fair enough, man. You have a great day.
Thank you much. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
Hey, everybody. Again, I want to thank you for joining us. Please join me tomorrow for Fridays with Phillip. It's not you have to be there the whole time. You can drop in whenever you want, and we'll hang around at least until 12:15. Even if nobody's there, I'll monitor it. You can pop on, ask your question, get an answer, and move on with your day. It's that simple, folks. You don't have to hang around for the whole time. But we are looking forward to it. The relaunch, Fridays with Phillip. Join me tomorrow, 11:30. Register on our website, statlerfinancial.com, and under the events tab. Have a great day. I look forward to, I won't be here tomorrow, but I'll speak to you again on Monday.